Industries that are hot, sectors set to outperform the market. That's what's here in Zacks Industry Rank Analysis. Let's check out another industry set to outperform with Charles Rotblatt, our senior market analyst at Zacks.com. He's got some interesting observations about the oil and gas exploration and production industry. He says we might be moving closer to a turnaround in that industry. How so?
And it's interesting, when you look at the trend in earnings estimate revisions, we've seen a big shift over the last 2 weeks. We've really seen the number of positive revisions double from 125 to 250, which is a huge increase. It's all in response to better than expected, or I should say better than feared earnings. But what's notable is sometimes when we see a company beat earnings estimates, say they beat quarterly estimates by 25 cents, we might see the full year estimate being revised up 25 cents or 26 cents, basically saying the analysts look at the numbers going, okay, they taught that quarter, we'll put that into our expectations, but we really don't expect the other 3 quarters to really be that much better than what we had previously forecast. That's not the case of what we're seeing in this group. We're seeing not only pretty large beats on first quarter, but we're seeing even larger increases on full year estimates. That means analysts really do think that for the full year they've misjudged what earnings are going to be, and they actually expect full year forecasts to be higher. And it's pretty important because when you look at natural gas prices, I want to point this out to people, they have actually been in a free fall all year. You can tell from the chart behind me, they're starting to actually stabilize a little bit, and that's pretty important for these companies because it does impact their revenues. A lot of these companies did report a decrease because natural gas prices had dropped so much, and they really made the earnings numbers on higher production and cost controls. But if we get any stabilization in natural gas prices or even some type of rebound, that'll just provide a little bit more upside for these companies.
On the oil side, what are you making in the latest rally in oil prices?
You know, it's interesting. Our oil analyst, Shiraz Mian, who works for Zacks Equity Research, really thinks oil can stay at current levels. We're not really seeing that play through towards on the exploration production side or on the oil field service side. We are seeing, overall for the energy sector, we are starting to see earnings estimates stabilize, and that's good. We are seeing the trend towards more positive estimate revisions, but by and large, it still ranks among one of the weaker sectors in terms of estimate revisions. It's not quite time if you're a long-term investor to get into the sector overall. There are select opportunities in there. There are select companies that are trading at attractive valuations. And long-term, I actually do like the sector, but I think short-term there are some worries. And certainly when you look at oil at 60, I think it could hold this level, maybe drift down to 50. I think though expecting the oil to get up to $100 over the near term is not going to happen, not without either a complete shift in the economy. We really start seeing true growth or some type of disruption such as a hurricane. But it does look like the worst might be over for the sector. It does seem this time around a lot of the CEOs in the oil industry and the natural gas industry have learned from the mistakes. They're trying to control costs. They're trying to live in their cash flow, within their cash flows. And that's a big shift from what we've seen from previous busts, particularly what we saw in the, I believe it was in the early 90s, late 80s in Houston, where people had really overbuilt and then faced bankruptcies. We're not seeing that here. In fact, we saw a lot of CEOs among the natural gas exploration and production companies talk about scaling back production so they can stay within their cash flows. And that's a very positive sign if you're shareholders. It signals these firms are trying to use fiscal responsibility.
I find it interesting that the price of oil is rallying at a point where demand for oil remains weak and inventories low. And what I'm hearing on the street is for prices to remain high, inventories must remain low.
And that's true. We are seeing inventories actually kind of pretty much staying with demand. People are driving more. I saw a study from AAA not too long ago saying more people are going to drive this weekend. We've seen sales of SUVs going up. If you look over in India, you're looking at the Tata $2,000 car. That's on the market right now. So by and large, we are looking at people not learning from the previous mistakes. At the same time, we're going to have more drivers on the road worldwide. So all that's actually going to soak up some of this inventory. Certainly the slower economy has hurt. I do think it's a temporary occurrence. And I think long term, if you look at oil, it is a problem. And obviously, we're talking about this as Obama just released new mileage standards for the automobiles. And I think it's important for people to understand that what we're seeing right now in oil over the long term is going to be a temporary blip, and I do expect the current prices to be cheap over the long term. But it's just when you're looking at investing, it's really an opportunity cost. Do you really want to take a chance on oil rebounding over the next 3 to 6 months, or do you maybe want to look at other sectors but understand that things are starting to look a little bit brighter in the natural gas and oil industry? Keep it on your radar while looking at other sectors over the short term to possibly make money.
All right, this trend that Charles talks about in this week's industry rank piece is apparent in several E&P companies, but he brings out the apparency in 4 in particular, and you'll want to go to the text version of this particular industry rank if you're outside of Zacks.com looking at this video especially, to get the names of those 4 companies and a synopsis under each one as far as Charles' assessment of how this trend is apparent for these companies. With Charles Rotblatt, I'm Terry Ruffalo.